I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now I'm bootstrapping. I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world. Welcome back to Tasty Live. I am Dylan Ratigan. Time for another episode of Bootstrapping. Our guest today, Tony Paquin, another guest from our friends at Republic in the process of raising money for a company called iRemedy.com. They describe themselves as America's preferred healthcare e-commerce marketplace. You can buy medical supplies, drugs, devices, technologies, goes back to 2015. And Tony, I have to say that while it's a pleasure to meet you and I have great respect for the people from Republic that I've met so far, I'm immensely skeptical of your enterprise, not as a result of your enterprise, I know nothing about it, or you, but because I'm immensely skeptical of the American healthcare system, and I question how any fool, or genius for that matter, could possibly succeed with a rational business proposition of any kind in the face of such a dysfunctional healthcare system. Obviously, I'm assuming you're trying to approach the system in a way that's trying to rationalize pricing in some way for some things. Walk us through what makes you even think for a second you have a chance to be rational in a world which is benefited by the government, is benefited by monopoly exemptions, it's benefited by a bunch of misaligned incentives that favor sickness, not health, incentives that favor hospitals over patients, incentives that favor drug companies over people, all the things I'm sure you know better than me, and yet you seem to believe that it's worth your time to try to enter this gladiatorial
crazy
madness. So,
yes.
You know, what are you thinking, man?
Well, first off, Dylan, thanks for having us. You're right. The guys at Republic are great guys. So we're excited to be working with them. And you're also right. So I think what you're trying to tell me is you're not a big supporter of the U.S. healthcare system.
Well, I don't think I mean,
yeah.
read between the lines. Read between the lines.
But part of what you're saying is exactly correct. And that is, it's not really a logical, rational system. And now I've grown up sort of in the software business. I'm a tech guy. I've done a couple of software deals before, first in insurance and then later in healthcare. And that's how I ended up with iRemedy. And, you know, it's interesting because the tech world always tried to get involved with healthcare, and then they would turn and run. Because in technology, let's talk like Silicon Valley, 2 + 2 always equals 4. But in healthcare, 2 + 2 could mean anything, right? And that's what you're talking about.
2 + 2 equals banana.
It could be anything. And so you're right. There's a lot of what you're saying has a lot of truth to it. It's regulated, it's bureaucratic, it's monopolistic.
It has corrupted incentives.
It's incentivized to not change, right? Which is the worst possible thing you can do when you need to modernize. So you're right. And gee, you're kind of talking me out of my business a little bit. No, so the a little bit of how we got there is like, yeah, well, I'll go into a lot of details, but I was CEO of a public company that was in the electronic medical record space. And so I started working with a lot of hospitals on the tech level. And then, you know, eventually left there and became a consultant. That's what all former CEOs of public companies do, and began working with hospitals. And in that process, you know, I worked at 600 hospitals, helping them build businesses.
And you came in as the retired or sort of former.
Yeah, that's what happened.
You're like the EMR guy. You're like, this is the medical records CEO talking to this guy. He can streamline the data system, blah, blah, blah.
Yeah, I knew the hospital CEOs. I was connected in the industry. You know, I had all that background. I had done conferences and written books, and did a lot in that space. And so I used that, got into the consulting world, started working with these hospitals, knew all the C-level guys, and started building businesses with them, like pharmacies, urgent care centers, doctors' offices. You know, when we say hospital, you'd be better off just calling it a health enterprise. You know, it's no longer a brick building that has a bunch of patient rooms. They own all kinds of stuff. Labs, urgent care, surgery centers, you know, imaging centers.
MRI, blah, blah.
MRI, all that stuff. And that's what we did. We built those. Well, so in that process, we were buying a lot of medical supplies sort of on behalf of or with these hospitals. And I'm talking
I mean, you're
hundreds.
talking about buying like IV bags and hospital
You
beds.
got it. Equipment, gloves, needles, syringes, scalpels, on and on and on. Everything you need to run a healthcare system. And that's when I saw, wow, this world is really bad, in the sense that it is old and just hasn't modernized.
Price
And we were
gouging, a third-party payer creates a catastrophic pricing incentive.
Oh, and look, McKesson, who's a company I work with and kind of partner with, but they're the large distributor of healthcare products in the United States, bigger than Amazon, $200 billion company, founded around the Civil War. They're what, 150, almost 200 years old. So that kind of tells you where they're coming from. And they don't really want to see things change. The way the system's working is working for them, right? So these large old companies, and the second one, Medline, they're about 100 years old. So these companies have been around a long time. And a system got created that really was very expensive on one level because you had layers of costs. So you had the manufacturer, the exporter, the importer, the distributor, the dealer. And in healthcare,
and you have the incentive to jack up the price because the patient never pays.
It's paid by insurance. So it's all kind of works its way back up to Medicare, the government, or, different things. So you go to the hospital, you don't know what a scalpel costs, right? So it all got buried. And that's why you have the $500 scalpel. Now, that was true, but up to about 10 years ago, now there's a lot of pressure. And remember that some parts of healthcare are moving out of the hospital and they're really focusing on becoming for-profit enterprises. Like a surgery center today really wants to make money. It's probably owned by private equity or a group of doctors. So suddenly costs matter. So we got in and we started looking at it. Now, what happened in medical supply is the same thing that happened in every other product category. That is globalized. It went overseas. And, and I mean like 90% of medical supply manufacturing is literally done in China, Asia, maybe a little bit in India, but for the most part overseas. And, that's why it worked until it worked and then it didn't work. When you hit the pandemic, it all just blew up. But drug shortages, supply problems, that's been ongoing. Like with this probably 20, 30 years, we've had a problem with drug shortages. The FDA maintains a list of products that are in shortage, just like an ongoing thing. Right today, if you go Google, cancer drug shortages, you're going to read some articles that just scare the daylights out of you. You got people in cancer, they can't get the drug they need. So what you've got is a twofold problem. You've got one, ongoing shortages, and two, high costs. And now people are starting to care about costs. Surgery centers, doctors' offices, urgent care, self-insured employers, the whole pay system is changing. And everybody's run out of money. I mean, at some point, it's Margaret Thatcher said, when you spend other people's money, eventually they run out of money too. And that's what's starting to happen, right? So the market is getting very sensitized to this cost. You got high costs and shortages. Well, what happened with me, being a tech guy, I looked at that and said, hey, we can invent some technology to improve that. Let's go create a Amazon-like marketplace and figure out a better way to deliver these products. And a year or two later, coincidentally, I did work with and became very close friends with a guy who later became my chief technology officer and co-founder. His name is Jim Harding. Jim sold a couple of companies to Jeff Bezos, went to work at Amazon as the vice president of technology, and developed and deployed what you and I think of as Amazon.com, the marketplace. He's really the guy. He filed the patent on it. So when I got into this project, I called Jim and I go, man, healthcare is a mess and, supply is just a disaster and it's $300 billion market and it's growing and, we could build a marketplace to solve the problem. What do you think? And he got super excited about it. Now, The difference is today, this was about 4 or 5 years ago when Jim and I were talking about it, he says, things are different now. And that is we've got really this AI, revolution that's coming. Now, this is Jim and me speaking probably 5 years ago. Today, everybody's talking about AI, but we started talking about 5 years ago and said, there's power out there that we can use to solve sort of the catalog and supply chain problem of the medical supply industry. And we set off to do that. We created some really proprietary digital agent AI technology, filed a dozen patents, and got launched on that. Then the pandemic hit, and suddenly everybody's talking about supply chain, right? It's the number one topic in the New York Times probably during that period. So we did turn out to be sort of having the right idea at the right time. And that's where we've gone with it. We've created our goal ultimately.
But let's stop because I'll take responsibility for this in the discussion. Okay. But let's this is all extremely valuable and important background. But let's go back to the tippy top, which is, what is iRemedy?
So iRemedy is a e-commerce based supply chain management distributor of medical supplies.
So who's the customer?
So our customers are, well, pretty much everybody. On one level, consumers. You can go to iRemedy and buy products for your home use.
So I can go there and buy Band-Aids.
Yeah. And
but that's obviously not your intended. That's
not our primary market, but we do that. And the reason we do that is it allows us to be open to the public, and we run Google ads and we get traffic, and you might show up and buy something. And then a doctor from the Cleveland Clinic will show up and buy something. He probably isn't supposed to, but he does, because whatever he's doing, is broken, and he loses patients. So he goes online, he Googles, he lands at iRemedy, and he buys. So we use that public marketing for that purpose. But our primary target market is what I refer to as the middle market of healthcare. And that's surgery centers, urgent care centers, imaging centers. They're big users of supplies, and they're profit driven. Like, cost matters to them. Frankly.
So if I'm an imaging center in Florida and I'm buying gloves, sheets, cleaner,
chemicals,
Q-tips, whatever, iRemedy, you want iRemedy to be their go-to source.
Yeah.
That's as an alternative to McKesson or Medline?
Yeah, or in partnership with McKesson, Medline, and all the others, because like a marketplace, there's some similarities in the sense that using our AI technology, you need a product. Well, we can get it. We know everywhere that product is, because our AI is constantly scanning the world and creating what we refer to as a smart catalog. So we refer to it as smarter supply, right? And that's what makes us super unique. Is our goal constantly is we want to know every product in the world as it relates to healthcare, where it is, how it's manufactured, where in the supply chain, who you can buy it from, and so forth. So we have redundant sources. So yeah, you can buy through McKesson, you can buy through Medline, you can buy directly from the manufacturer, and so on and so forth. And it's very complex.
But let's go through iRemedy. So you're saying the first one of the proprietary aspects of your business, because also you're raising money right now in Republic, correct?
Yeah. Exactly.
So if I want to understand your business, one of your proprietary aspects is you're saying you're using artificial intelligence to do a better job of identifying the price and location of medical supplies globally.
Yep, that's exactly right, to help solve the shortage problem.
Mm-hmm. So if I want to know where the IV bags are, hospital beds are, medical gloves, whatever.
And my primary distributor
technology to find it.
Yeah, my primary distributor doesn't have it, but I gotta have it. Where do I go? Well, it's a very complicated problem. So I just go to iRemedy, and iRemedy's digital agents scour the planet to find that product.
Got it. So one iRemedy, your pitch is iRemedy does one of the best, if not the best job in the world. What exists, where it is, and how to get it.
Yeah, our intent, our aspiration is to have the largest and the smartest healthcare products catalog in the world.
Mm-hmm. Yeah. And then the second component, I'm sure, like every business, this is not any grand insight on my part, must be price driven.
Exactly. Well, here's the thing, unfortunately, it goes back to your opening comments about healthcare. And one of it is this sort of discretionary unfairness of the whole pricing system. So the simplest way I can describe it is if you take 100 doctors, put them in a room and ask them how much they pay for this scalpel, you might get 100 different answers. It's a very convoluted Byzantine sort of system. Well, that tells you it's fundamentally unfair. And it also tells you that there's profit, there's margin, you're irrationally stuck in that process all over the place, right? And and the doctor can't figure it out. One thing, look, he or she, they're just trying to treat patients. They're not in there to figure out these 5,000 items they need and how do I get the best price. So what iRemedy does is it knows the best price. It's connected up with all these group purchase organizations called GPOs, the suppliers, the distributors, and we assure that we're getting the best possible price for that item every single time for that buyer at that location. And
Are you
simple,
actually pressing against suppliers? Like, are you making markets? Like, if I'm I don't know what the medical. I'll use a hospital bed, a physical bed, let's say.
Sure. Yeah.
That and you're saying the best price for a hospital bed is $100, just for purposes of discussion of whatever the number.
Yeah.
But when you go to the market, there's one for $100, there's one for $500, there's one for $10,000, there's one for $100,000, there's one for $50. Right. Are you making markets against the $10,000 bed supplier, saying, "Listen, like, you can't be charging $10,000 for these beds"?
Yeah, exactly. So what happens is, because to explain specifically what you're talking about, because that kind of thing absolutely occurs, is I'll go to that bed guy, let's call it using your example, and I'll go, "Hey, over here in Los Angeles, we're buying that bed for $200, and over here in Chicago, you're trying to get $600. We know that's unfair. We need to reset your $600 price down to the $200 fair
And then
price."
it's their option basically to bail out on the iRemedy platform at that point?
Yeah, well, they can go, "Well, we're going to elect to not take care of that client." Well, that's a difficult decision to make, right? And plus, they had margin in the 200. So it's not like I'm asking them to lose money. That's not what we're talking about here. And there is this, and that comes into that sort of inherent kind of discretionary unfairness in the market, where you get all these different people paying different prices. But that item, going back to your bed example, by the way, it wouldn't be $200, it'd be more like 5,000.
No, I know.
But, yeah, but it has a cost of goods. That manufacturer is making that thing at a certain price, and they're marking it up. Well, they shouldn't mark it up 50% here and 500% there. That doesn't make sense. That's not a good system, right? And all we're doing is using data to ensure the flattening of that pricing system. That's really what's happening.
So then the next question that occurs to me, so let's assume that that's all working to some way. It's a little bit of a grind, I'm sure, and it sort of it takes time, but that's a natural sort of sandpaper across the market of that technology creates better pricing and transparency and all that thing. Great. What about the gorillas in the room, being McKesson, being Medline? I forget there's another one that starts with a P. I can't remember its name right now, but there's another big medical supply dealer. How do they interact with you? And are they not trying to destroy you?
No, so it's interesting, right? I did think that might happen, but actually, we're clients of theirs first. But in some way, when you think about it, they like us a lot, because in essence, we're like an aggregator of clients. So in the old model, if you were running McKesson 10 years ago, even just pre-pandemic, you had salespeople, and they had cars, and they're making $150,000 a year, and they're driving around literally taking donuts to the doctor's office, that thing that we visualize, and they're working, right? Well, that model we all know is no longer efficient, right? Now, on top of the financial part of that, the doctor's office, they don't want to see these salespeople anyhow. They're too busy. There's now, COVID, there's contamination problems. and there's security problems. They don't want sales reps walking in the door. So the McKessons and Medlines of the world, they're looking for a more efficient way to go to market. So they got to service all these 500,000 doctors' offices. How do they do that? Well, iRemedy is like an aggregator. We roll it all. We're one client. Then we turn around and, in essence, distribute to thousands.
Distribute order flow.
Mm-hmm. So in some ways, we help bring efficiency to them.
So how big is, what by dollars and cents, how big is your business and what's the growth rate?
Yeah. So last year we did 50 million. And, our target is 30 to 40% year over year growth. We essentially have three lines of business, simply stated. We have you, the consumer. That's our smallest line, but has that public marketing benefit. The second is we have that middle healthcare market, that I talked about. Now, we get everybody. I mean, I get big hospitals, small hospitals, all that, but our target is that middle market. Then our third line is actually the government. We do quite a bit of business with the government. First off, the VA is the largest healthcare provider in the country. They, take care of about 40 million veterans and their family members. So they're a big healthcare provider. And then the government is in a very unique position where they're beginning to take a look at, the global medical supply, issue, frankly, as a national security issue. Like, if China is evolving as our global competitor, is it really wise that 90% of our medical is dependent upon China? Mm-hmm. So the government is beginning to take a look at what we refer to as reshoring or de-risking that supply chain. And that creates opportunities for people like us to help them in that re-domestication of that supply chain. So iRemedy, through our platform, represents this emerging group of domestic-based manufacturers. That's another important niche for us.
And what is your margin?
So it depends on those three lines, right? So it's at that first line of that consumer business, it's in the 25 to 40% range. You move up into that second line, and we hold a pretty solid 15%. You get up into the government, and that could be 5 to 10%.
Mm-hmm. What are you raising money for?
What you do when you're in these fast growth companies, where you raise money, one, to keep enhancing the technology and building this AI engine. And there are some other AI components we haven't discussed yet that are extremely important. So that's job one. And job two is just to build your sales and marketing presence, so we can keep ramping that revenue.
And how much are you raising?
Excuse me?
How much are you raising?
So our Reg A is for 25 million.
And what's the enterprise value on that?
So our post money valuation, if we raise the full 25 million at the Reg A, would be about 300 million.
Got it. And have you used Republic in the past to raise capital?
No. So my background, has been Reg D accredited investors. We have about 150 doctors who are investors in the company. That's how we originally funded the business. As I've mentioned briefly previously, I did an IPO. I took a company public on the NASDAQ. I'm a little bit old school in that capital world. This is our really, first foray into the crowdfunding segment. Now, we're digital marketers. We like it online. We do a lot of digital activity. We have a lot of social media. So we're really excited about this sort of democratization of the capital raise effort. And that's why Republic is a great partner. They know this part of the business. They're good people to partner with on this level. We are super excited about that Reg A approach, allowing the smaller non-accredited investor into the deal, because those are our customers. Mm-hmm. And, they've always been big supporters. In the healthcare world, the doctors and the nurses and the workers, they're very aware of what you and I have been talking about.
Sure.
So they're the first ones to go, hey, these guys got a great idea, and they tend to jump on board with us. And then even our consumer business, we constantly get, and we have like, I don't know what number it is now, but 10 or 15,000 5-star reviews. But, we're constantly getting people go, oh, I couldn't find this product anywhere else. Thank you so much for having it. They're enthusiastic supporters.
Mhm.
So the Reg A is this opportunity to bring them in. I think it's super exciting. I think it's going to be a great experience, I'm sure.
iRemedy is the business. Tony Paquin is the boss. The raise 25 million on Republic. You're watching Bootstrapping. I'm Dylan Ratigan. More Tasty Live right after this.